Hey everyone, today I'm going to talk about why I sold ULTY, what I'm looking at buying next in more detail, and some news about ULTY and some other yield max funds. Um, so let's dive in. First of all, as usual, I'm not a financial advisor. Content on this channel that I'm talking about is not for is not professional financial advice. Excuse me. Um, so please seek out a professional if you need that advice. This is just my personal journey towards growing my individual income account. So that being said, let's take a look at my actuals here. So the market's been pulling back a little bit, especially the last couple of days. As you can see here, my overall portfolio is down $535, or 1.9%. Not bad. Anything, this one's related to Tesla, but anything crypto related is really down quite a bit, um, which is okay. I do think that's going to recover when, I'm not sure, but I'm okay with that for right now. But I did sell ULTY. Part of that was because the recent distributions have just been going down with the stock price. You see today it's around $4.17. That just keeps going down. There have been some slight bumps back up, but those seem to get eaten right away, and it just seems to go down. Now, the big news with ULTY, let me switch to it here. This is just a post that somebody made on a blog with Snowball Analytics. But essentially, they're doing a reverse split. So for every 10 shares that you have of ULTY, it will now turn into one share, but they'll be worth 10 times the amount. So I'm not going to explain that a lot. It basically doesn't mean a lot other than the fact that now the stock price will be whenever the day is that it's going to split, it will be around $40 a share versus the $4 a share. There's a lot of reasons for that, but you can see here there's also all of these other ones, these short Tesla, Nvidia, coin, this AI and Moderna, all of these Coney. A lot of people own Coney. Those are all doing reverse splits. So the concern there is there's no immediate concern with that. It's all the mathematics work out that you'll still get the same amount of distributions unless things change with the company. The concern for me is that with a split, now it basically has $40 worth of value to decline, and uh, before it was at $4, and yeah, it can go to zero just like it can at $40. However, you're basically resetting that to make it look like, oh well, at $40 we've got a lot of room, and if it drops to 35, well, we're okay. A lot of people look at that as more of a psychological thing that says, when you're looking at a $4 stock, well, it doesn't have only a couple dollars to drop before it's not worth hardly anything versus $40. So I don't know. That's just my psychological feeling towards these reverse splits. This is a pretty good article. Look it up on Snowball Analytics, Yield Max Reverse Split News, and they go into a lot of details. I'm not going to get into them, but anyway, this wasn't one of the reasons that I sold it. I sold it basically because of the stock price is continuing to go down and the distributions have dropped. They were steady there for about 9 cents, and I was okay with the stock price dropping if the distribution stayed the same. But with the stock price dropping and the distribution, which makes sense why they would both drop together, but because of both of those, I decided to sell it. So as you can see here, I dropped it off. Now I had drip on, so I actually have $17 still of of ULTY because it automatically bought when I sold. Let's see, look at my log here. So I sold my 281.5203 shares. I forget, my price was around 420, I think, when I sold it. But as you can see here, on that same day, uh, I got, I got sorry, not 17 shares, but I got $17 worth of ULTY stock. So I had four shares of ULTY stock from the $17 that I got from the dividend that they paid out. So I'm gonna keep that. I don't know. At some point, I'll probably sell that, but anyway, that's what you're seeing here is a $17 worth of value that basically I didn't pay for. I haven't figured out a great way to calculate that in here, but I'm going to leave this line item in here just so that I can see all of my total dividends that have been paid out since I started this in September. Let's see, no other changes to this, the spreadsheet here. I am watching, a couple of these other ones, the golf, this Guggenheim one. I need to investigate that more, but again, that's only $300 I have invested, so I'm not too concerned about that. But I still want to understand why this is dropping so much. All of the crypto ones make sense because crypto has been falling off a cliff lately. Okay, so what am I going to buy next? So for selling ULTY, I think I had 1,400 and some dollars, which is not accounted for here. I need to put my cash in here. But the $1,400 or whatever that I have from that, I've been looking at. Well, I gave it away, but I'll select them all. So I created this little database just for my own analysis. Maybe there's something out there that exists already for this, but I wanted to see uh, what kind of ETFs were out there, including kind of what their main holding is. Some of them, like this, are mixed, so I didn't want to add in all of those details, but I just didn't want to get too much of PLTR, for example, or too much of NVIDIA, or whatever. So I wanted to kind of create this own database for myself so that I could understand. So tons of Yield Max, Defiance, Granite shares, and Roundhill are my main ones here. So there's 110 total. These are all high income, which means all of their returns are fairly high. So what I did was looked at just the stock price, the ETF price, the market price, and basically it's a crazy formula, but it calculates the return over the past 30 days based on the current price over here in column B. And it has the 6-month price change and year to date. So it's kind of looking at different time frames for each of these to say, okay, if in the last 30 days a lot of things are down, so if it's down, for example, like this gold miners GDXY, it's like, well, okay, it's down 6% in the last month. However, 6 months and year to date, it's still doing pretty well. So it kind of gives a different view on how the stock price is performing. And then over here, I have the dividend yield on the current price. So this is based on their last distribution that I could find anyway. Based on that distribution and the current price, you get a 43% what would be yearly return. I also did that on the earliest price. So some of these that have went up significantly, this is up 10% year to date. So essentially, because it's gone up 10%, that actually drops the current dividend yield, unless the dividend yield has kind of appreciated with it. But if it were to pay this price based on your cost a year ago or year to date at the beginning of the year, you would have a slightly higher yield for that money that you put into it. So I just wanted to compare those two because sometimes the yields look small if their distribution has stayed the same, but their stock price has gone up really high. Sometimes that makes it look like their distribution is really low, when in fact, it's actually pretty high based on your cost if you got in. So anyway, hope that makes sense. If not, leave a comment below and I'll try and explain it further. Anyway, so that's what the two different yields are here. And again, this is the latest distribution. I think all of these are weekly paying. I have a couple monthly in here. So that's what the formula is, all goofy because it's calculating it if it's weekly or if it's monthly. Yeah, sorry, that would be this one. Yeah. So if it's monthly, it multiplies the yield here or the distribution by 12, and if it's weekly, it multiplies it by 52. Which again, these numbers don't have to be perfectly accurate. It's more an idea of performance, and it's trying to compare them all equally. So as I look down here and I look at my portfolio, I'm saying I've got a lot of yield max, and boy, if you go to X, the old Twitter, there is a lot of negative publicity towards yield max, especially on ULTY and all of these NAV eroding ETFs. And I can understand it. Yield max is coming out with new products, and everybody's saying fix the ones that you currently have before introducing new ones. But they're very harsh on X, which may or may not be justified. I don't know. But I have a lot of yield max, so I'm not really interested in yield max unless there's one that jumps out here in this database. So as I'm looking, first thing I'm looking, is there any that are all green? Yes, okay, Biggie, which I already own some. But essentially in the past year to date is 3.4. Oh, also column F says how many months it's been around, since a lot of these are fairly new. So this has been around almost, well, I guess since the beginning of the year, 11.3 months. This should be all year. So, which, I kind of question if that's true. I thought Biggie was fairly new. Maybe not. Anyway, the return are all green, which is great, and a 53% return and 55% on the earliest price. So again, it's only changed 3% year to date. That's why these two are fairly on par, the current yield and the yield on what would be your cost. So that's a good option. However, Biggie I already own, so I don't know if I'm going to add to that or not. Here's another one, Soxy semiconductors. But again, this is another yield max, which this has done very well because of the holders, the semiconductor. I'm not sure, NVIDIA. I'm not sure what else it actually has in it. But anyway, Soxy is a good one. It's yield max, so I'm trying to avoid those. Anyway, so as I keep scrolling down here, looking at this, Defiance has AMDU, which has done very well, but again, it's only been around for 3 months. And AMD, that's another one in Soxy, I'm sure. AMD, I don't think that's one. Actually, let's look and see. No, I have Amazon and NVIDIA. NVIDIA, how do you say it? So I could add AMD, however, I'm getting more semiconductors because I also have PLTR and, which is Palantir, and I'm not sure, I could look back, but I feel like I have a lot of those. So, but again, that looks very good performance-wise over the past year, and I do believe probably AMD is going to stick around. So some of these other ones, here, MicroStrategy or Strategy, down 86% on the year, or since, I guess, in the past 7 months. Obviously, I'm not looking at that. So looking at Defiance there, the only one I really like is that AMD that's standing out to me. Granite shares, as I'm looking at that, the only one standing out there is again AMD. And you compare this, again, this has only been around 2 months, but it does seem like the Defiance one is doing better overall than the Defiance one. Let me get to the point. And yeah, here's the AMD for Roundhill. I really like Roundhill's approach, and it seems like in general they're more liked on what they've done. Which, again, I'm not basing my decision on what people like because it's just opinions. However, reading a lot of their prospectus and their looking at their performance, a lot of their stocks, I do want to own more Roundhill. Actually, do I own any Roundhill right now? No, I have one Granite shares, a lot of yield max, Neos, and then a couple of Rexfang here. So I'd like to get a Roundhill. So I'm a little biased towards Roundhill, but if I'm looking, it's like, okay, AMD looks pretty good. The one that really caught my eye is right here, Google. So this one, GOOW, is probably the one that I'm going to buy this week. Again, if you look at the current yield, it's 48%. But this distribution, based on if you were to buy it 4 months ago, is a 65% return, which to me is good. Obviously, it's not as high as some of these other ones, but it's like I already own HOOY, so, and I believe in Google long term. I know it's had a crazy run, but also some news came out for this. Warren Buffett, Berkshire Hathaway, disclosed a $4.3 billion stake in Alphabet at the end of the third quarter. Surprising move given its traditional value investing philosophy, blah, blah, blah. They've owned Apple. But this seems like a pretty big investment from Berkshire Hathaway. And if you know anything about Warren Buffett, obviously he's pretty good. Now, he's got a very different philosophy for investing than I'm doing here with income. However, anyway, that's just positive news. I feel like I'm buying it at the top right now, so I'd love a little bit of a pullback on Google before I buy this. However, it's been fairly consistent. Even some of the pullbacks, I know this GOW is a leverage fund, but even some of the pullbacks, it hasn't done too bad. Looking at a comparison here on stockanalysis.com, the orange is GOW compared to blue Google, and then the bottom one here is GUI, the yield max one. So if you look at the past couple months here, the last 3 months, you can see it's tracking Google very well. I keep saying Google. It's called Alphabet, but whatever. We all know it is Google. It's tracking it very well, and in fact, it's a 1.2x leveraged, which means that it's going to be 20% roughly higher than the moves of Google. So 43% in the last 3 months, very good. If you zoom out a little bit, it hasn't been around, only a few months, unfortunately. So I can't see all of the data. But actually, even GOY from YieldMax is doing fairly well at tracking the stock. And then here's the 6 months window, but it's not really fair because this didn't start until July, the Roundhill GOW. So anyway, that being said, that's the one I'm looking at. I really like that one just for the numbers because it's Roundhill. It's only been around for months. But yeah, I don't know. I like Google and I don't own any currently. So I think that's what I'm going to be buying hopefully this week. If the market does pull back, continue to pull back, hopefully I'll get in at a good price. That's all I have for today. If you made it this far, thank you. We're at 97 subscribers, which is awesome. Love to get over 100, love to get 500. I don't want subscribers just to have subscribers, but I do want people to, build a community like there is already, just so we can talk about these things. And if you have ideas of like, hey, this one looks really good, some people have already commented that, please let me know in the comments, shoot me a message, whatever it may be, and let's talk about it because I think this space is very fascinating, the income space. So I'd love to continue to talk with people and learn more. So if you have any questions, comments, whatever, leave me a comment. Let's talk. Thanks.